Good morning. It's time for Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me today is Vinny Motiwala. Vinny, good morning. It's a topsy-turvy start to the trading day so far. The first couple of hours, we made a low, then we slipped into the green, then we are again heading towards the lows. So, yeah, it's been a bit...
The only thing green is mid-cap and you. There's nothing else in the green other than that right now.
Yes, indeed. And, of course, it was the Nifty Bank that was earlier, that made a record high earlier this morning, and that too has given up most of its gains and has slipped into the red, and that is reflecting on the Nifty screen as well. But no reason to complain as of now, because they're still holding on to lower levels on the downside, and 24,600 is the low of the day for the Nifty, and it's holding on to those levels. And as Vinny was highlighting, the broader markets are continuing to do well for themselves. The mid-cap index still in a slight shade of green, if you could call it that. That too is off the highs of the day. But the Nifty Bank, though, made a new record high earlier this morning above the mark of 56,150, and then it slipped into the red. It recovered some bit and has slipped into the red again. So 100 points down on the Nifty Bank as well. Of course, it's been a day that has been marked by plenty of block deals, almost 5,000 crore worth of block deals that have taken place in the stock in four names, and the three of them are the top losers on the Nifty 500. Yes Bank, Aptus Value and Ola Electric. Yes Bank is down 8.5%. Aptus Value is down 7.5%. Ola Electric is down 6.5%. So the block deals have marked the start of today's trading session, Vinny.
Absolutely. And advance decline ratio, obviously, given that the mid cap is still doing better, mid and small cap, that is also in the favor of advances versus declines. That's what we're seeing coming in. And right now, I'm just looking at the Nifty 500, the names that are buzzing into it. We have a lot of chemicals and fertilizers names that are managing to hold on to gains. So that seems to be trending. Whether you look at a fact, Rashtriya Chemicals, Deepak Fertilizers are among the top gainers that are coming in for the Nifty 500. Other than that, we have Radico Khaitan, Hindustan Zinc, as well as BEML, which are managing to hold on to some bit of a gain. But yes, that's the market setup that is looking like over there right now. Muted day coming in for the benchmark indices, no complaining on the broader end of the market. But on that note, let's bring on board Manish Jain from Centrum, who is joining in with us to discuss the market fundamentals, his top sectoral picks that are coming in as well. Manish, good morning, and thank you so much for joining in with us. Right now, what we are seeing is a very range-bound market. You do see those picks, highs coming in and then again a fall, but very, very range-bound. What are the sectors that maybe you would be looking at? Given there's a lot happening on the global front, it still continues, right? Every day you hear something new. What are you looking at right now in terms of the market?
Yeah, so what you're saying is absolutely right, which is that at least specifically on the global front, every time you start feeling that, things are now starting to settle down, you hear something new, you hear something interesting. There's something which happened on the Russia-Ukraine war side. Then, just when you believe the whole tariff thing was behind us, something you heard a couple of days back. And that's why what my sense over here is that the market for the near term, in my view, is going to remain range bound. But from a medium-term perspective, say by the end of this calendar year, I'm still very optimistic that you will see closer to 27,000, 28,000 levels of Nifty, which is assuming that the P multiples continue to remain constant at around 21 times or thereabouts. So you will see markets rallying on the back of earnings growth. I'm fairly optimistic that you will see an acceleration of earnings growth standing where you are today going into the Q1. I'll be very surprised if Nifty does not report closer to 12, maybe 13% sort of earnings growth in Q1, and a similar level for FY26 as well. So sectors that I'm positive on, number one, are going to be rate sensitives. You've seen inflation footprint 6-year low. I'll be very surprised again if RBI at least does not do 2 more rate cuts of 25 basis points each. So sectors like real estate, sectors like auto, discretionary consumption, these are again something that I would favor. Pharma continues to look very steady. But the dark horse for me, if you have a 1.5 year sort of an investment horizon, are going to be larger banks. That is one space where, I would look at the risk reward being very, very favorable at this juncture, where valuations are very, very benign. Large cap stocks, some of them are trading at 10-year low valuations. And yet everything from an asset quality as well as from a credit growth perspective seems to have bottomed out.
27 to 28,000 by the end of the year. Of course, conditions apply. Manish, good morning. Thank you for joining in. A big part of that 27 to 28,000 would, of course, be if the index heavyweights step up. And a lot of these index heavyweights belong to the private sector banking space. There's been a general consensus on the street that private sector banks, large private sector banks, offer significant value compared to other pockets. But when it comes to returns, well, flattered to deceive, if you could call it that, over the last 2 to 3 years. Do you still stick to that premise that, okay, sooner or later they will step up and justify this value premise?
I think sooner rather than later. See, some of the larger cap private sector banks have actually been value traps rather than value plays. Specifically, when you look at some of these names from a 3, maybe 5-year perspective as well, right? The CAGR returns, despite the recent up moves, have been all single digit thereabouts. But I think when you look at the core issues that are plaguing the banking sector, right, which is number one is the asset quality issue, which has been fairly recent, maybe 2-3 quarters thereabouts. I think the issue fairly well settled now. Incrementally, I think it's not worsening anymore, which is a big heartening sign. I'm fairly positive that you will see the overall credit growth in the economy starting to pick up from where it is at least 2 notches, maybe 13 to 15% band fairly soon, which is again going to be great from a credit growth perspective. And deposit mobilization issues that some of these banks specifically were in a very, very bad shape are now starting to get in a very better shape. So if you have a 1.5-year horizon, I think it's absolutely the correct time to buy banks. And more also that angle of sector rotation comes into play, right? Now, if people are going to move away from IT, then where is that money going to go into? So there is something that you have to look at from a 1.5-year perspective that has not really done well, because sector rotation has been the play for 5 odd years now. So fundamentally and liquidity wise, I think both perspectives, banks make a lot of sense for investors at this juncture.
Sure, you're talking about the sector rotation also coming in. Banks is also what you're saying. My actually next question was going to be on IT, given that IT also has seen a correction, right? So why do these companies don't become attractive even now, right? There are some issues that are coming in, but when you look at commentary that came in from TCS, Wipro, hiring trends that they're talking about in FY26, they're saying better trends are what they're expecting. Why not IT?
I think IT is more of a victim of sentiments, right? As long as the conundrum on the US economy continues to be there, IT, particularly larger cap ITs, I don't think they're going to be performing anytime soon. So it's more about sentiment rather than reality. Like you said, has the earnings growth bottomed out in IT? Absolutely, I do believe it is. But then the point here is that if you look at it from different points of time perspective, right? The view people had on multiples on IT in 2018 versus what the multiple view on 2021-22 was entirely different for the same earnings growth, right? So that's the core issue with IT, which is more about sentiment. And US is going through a very unique situation where the dollar is weakening and the yields are strengthening both at the same time, which is not something that has happened ever before. So people are not sure in terms of how this potential stagflation situation in US is going to be tackled, right? So as long as that fog is lifted, I don't really see IT participating in this potential 6-month rally anytime soon.
Since you brought up sentiments, Manish, another sector that is either a victim of sentiments or a boost with regards to sentiments is PSUs. They were the talk of the town through 2023 for a better part of 2024. Then there came a 7-8 month phase where nobody was talking about them. And now suddenly everybody's talking about them again. Where do you position yourselves in this wide gamut of PSUs, be it the oil and gas utilities, be it the power financiers, railways, defense? Where are you placed here?
See, one part of this whole basket that you mentioned, which people have to be very cognizant about, is that when you look at the central government capex allocation of 2020 to 2024, those days are past and behind us. You are not going to see a 30% increase in central government capex allocation anytime soon. The focus over there is clearly shifting more towards execution. So the pivot of the economy is shifting very clearly from what is basically being an investment-led economy in more towards consumption-led economy. And that's a reality that we'll have to look at this juncture, starting where you are. So are the growth days of the past going to come down? Probably not. The only reason why these defense stocks and infra names are buzzing at a certain point of time is because people were able to see certain amount of value in them. They had corrected fairly sharply. But having said that, the pockets of value where I still do think that can be looked at, for example, banks, especially larger cap banks on the PSU side. I think that's a great space to be in. Power again, and all the sectors that are related to power, I think again, a great space to be in. So you'll have to be selective as far as PSUs is concerned. But the bottom-up approach to money making, I think there's still enough picks to be had.
Very interesting conversation. Manish, thank you so much for sparing time and joining us today. Looking forward to having you more often on the show. Manish Jain of Centrum there with his top sectoral ideas. Take a short break. On the other side, all things commodities with Manisha Gupta. We'll be right back. Stay tuned.
Welcome back to Trading Hour on CNBC-TV18. Not much of an exciting day that we're seeing coming in for the Nifty 50 or the benchmark indices specifically, like you can see on your screen. As of now, the Nifty is trading at the day's lowest point, down 0.3% in today's trading session. Banks is not something that is holding on to good gains as well today, so that is something that we'll watch out for. But this is going to be headed in the second half of the trading session. Nifty Bank also is trading at the day's lowest point. Like we mentioned, mid and small cap continue to do well. But let's shift focus and talk about what's happening in the world of commodities. Manisha is joining in with us this morning for that. Manisha, good morning. And today we're putting the spotlight on crude.
Yes, we are, because we've seen a very strong gain for a second straight day coming in for the crude oil prices. 3% of gains in the overnight markets, and with that, we're trading at a multi-month highs there. Well, there is, to begin with, decline in dollar index. That one is trading near 3-year lows, seems to be supporting the crude oil buying, not just crude, but various dollar-denominated commodities therein. But for crude specifically, it has to come in from OPEC and allies meeting, which has said that they will be increasing production for the month of July as well by 411,000 barrels per day. So it's going to be a third straight month that we will be seeing that marginal increase continuing. The street is not surprised. This is a number that they have been talking about for some time. So this was well digested, and that is what the markets reacted to. But apart from that, it is also about Iran and US conversations on the nuclear deal, where we already have seen 5 rounds of conversation, and it's nowhere near its result. That is adding premium to prices. Markets also are reacting to the declining supplies from Canada, where the wildfires have just about extended and cut 7% of that country's oil production. It is also about the U.S. rig count, which has continued to decline for a 5th straight week now. And the U.S. oil and rig count now is at the lowest since 2021. There is immediate tightness in the global markets when it comes to crude availability that you can see in prices. And then the peace talks between Russia and Ukraine also do not seem to be going anywhere with the kind of escalated hostility that we've seen in the last couple of sessions there. More sanctions, where will it lead from here on? It's been 3 years already. So all of these factors, as you can see, almost all factors supportive of crude prices from where we stand.
Okay, Manisha, thank you so much for that. So that's the update coming in the world of commodities on crude specifically. But on that note, let's just slip into a very short break. And when we return, we'll discuss market technicals now with Mitesh Thakkar and also discuss their top trading bets. So don't go anywhere. Welcome back to Trading Hour on CNBC-TV18. Now, it's already been a year for the third term of Modi-led BJP government. How have the market performed in the last 12 months? Hormaz, across to you. What are we picking up? What are you seeing? What are the trends?
On the same day last year, Dalal Street witnessed one of the 2 most manic days of 2024. Now, exit polls were predicting a thumping majority for the incumbent Narendra Modi government for the 3rd straight term. Now, in response, here's a look at the way the markets rallied on the 3rd of June last year. The Nifty Bank, the broader markets, all of them. But the actual gains came from the PSU stocks, the stars of 2023, carrying on their shine into 2024 as well. Alas, the next day, when the actual results were out, the BJP fell short of that magic 272 number, and the markets did not like that. The market lost double of what it had gained on the 3rd of June. And if the PSU stocks led the up move, they also bore the biggest brunt of the exit polls going wrong. PSUs were the biggest contributors to the 31 lakh crore rupees of investor wealth that was wiped out on the 4th of June. However, when the markets realized that the NDA will remain in power and Narendra Modi will become Prime Minister for a historic third term, the recovery began. The Nifty went on to make a new high 3 months later, as did the broader markets during the course of the year. And despite the sharp sell-off witnessed from then until March of this year, most of these indices have had double-digit gains during the last 365 days. The underperformers, PSUs. And this 4.5% surge that you see is also courtesy of the recent up move that you have seen in these railways and the defense names that has propelled the index back into the positive territory. So who's been the biggest gainer on the Nifty during the last 1 year? The index heavyweights? Not really. Mostly new entrants like BEL, Shriram Finance, Eternal. They are the ones that form the list, completed by legacy names like HDFC Life and Bharti Airtel. The names on the downside, though, should not surprise you other than Tata Motors. The only Nifty stock that had doubled in value in 2023 is down 20% during this period, and this is after recovering from its 52-week lows. Now, IndusInd Bank and others like Adani Enterprises complete the list. Now, let's take a look at the broader market gainers. Paytm shares are still down 56% from their IPO price, but if you were a buyer in the stock on the 4th of June last year, you would have made a cool 2.5x on your investment already. The recent rally in shares of BSC, Masgaon Dock and Solar Industries also puts them into this club. Now, on the flip side, Vodafone Idea leads the list of losers, followed by Ola Electric, which listed in July of last year. Hindustan Zinc and Astral are some of the other underperformers, down between 25 to 30%. Now, if Masgaon Dock was part of the mid-cap winners, Garden Reach is part of the small-cap winners, also having doubled from June of last year. And this is despite a 60% correction from the top and a subsequent recovery after that. PG Electroplast and Zen Technologies are also part of this list, having doubled and even tripled in value during the last 365 days. Losers here are also not from a specific sector. Birlasoft, which has been under pressure recently after a downgrade, Titagarh Rail, Tejas Networks have all faced some of the other headwinds during the last 12 months, and it shows up in the price. PSU stocks, known for their triple-digit returns in recent times, have barely managed to cross double digits during the last year. Barring BEL, most of the other names in the list have only gained between 10 to 20%, and this I'm talking about the PSE index and their constituents. Even on the losers, the once high-flying names like IRFC and REC are continuing to grind lower, having corrected between 40 to 50% from their highs. So it's been a year to Modi 3.0, and while the markets have delivered decent returns despite multiple global headwinds like tariffs, the PSUs would want to now raise their hand and play catch-up and bring back the days of 2023 when they were simply unstoppable.
Okay, Horbas, thank you so much for that. A lot of interesting trends that have shaped up in the last year. Let's see what happens in the remaining term also as well in terms of the market. But let's bring on board Mitesh Thakkar, who's joining in with us to give us a quick check on what's happening on the technical front for the market. Mitesh, good morning. And overall markets, remained in this range. You could say 24,800, 24,600 to 800. It's not going past that. Every time it goes past that, it falls down. What are we supposed to watch out for in terms of levels, key levels for the Nifty as well as the Bank Nifty?
Basically, I think the markets are consolidating after that big rally which happened from kind of 22,800 zones. And then we went to as high as about 25,095 or 25,100. And then we've gone into a sideways action. It looks like 25,050, 100 is the upper end of the zone. 24,600 to about 24,550 is the lower end of the zone. I think we might just see this consolidation action continue for the next few more days. And in case we start breaking on the upside, then I think I will look at 25,500 as the next target area. And if you break 24,460 on the downside, which is a slightly low probability event to me, then we might give up another 200-300 points, but that should be it. And then the correction should be over.
Okay, and Mitesh, your top picks that you're looking at, top bets that you're looking at, Hormaz right now has mentioned a list of names that have done well, not done well as well in the last 12 months. Anything that in the category of not looking exciting and you think now is the time to enter?
I think, suggest some trading ideas over here. To me, NMDC looks interesting, I think, from the metals pack or rather the fells pack. So giving a good reversal after 4 or 5 days of pullback. So buy here with the stock below levels of around 70.5. Look for target of around 75. The other one which I like is, State Bank of India is just hovering around the breakout level of 18,820. It's made a high of around 818.5 today. So once it breaks 820, buy the stop below 800 for a target of around 855.
Mitesh, thank you so much for spending time joining us with your views on the index and on specific stocks as well. We'll have you back towards the close of the trading session. Take a short break. On the other side, Gunjan Prithyani from BofA Securities joins us next as we put the spotlight on the auto sector. Stay tuned. We'll be right back. Welcome back. At the lowest point of the day now is the index breaking below the earlier low of 24,600. We are now at 24,595, so 120 points down on the Nifty, and another 450 down on the Sensex as well. The stocks that are leading the losses as of now, if you could pull up the contributors, they would give you an idea of the stocks that are contributing to this fall on the Nifty and on the Sensex as well. It, of course, has to be the index heavyweights that are contributing to the downside. And if you could take a look at them, and of course, at the lowest point of the day, and of course, not take away from the fact that the broader markets too are showing some bit of resilience, but not so much. Look at that. ICICI Bank, L&T, Bharti Airtel among the top contributors to the downside. But continuing our coverage from the BofA Securities 2025 India Conference, Nimesh is now in conversation with Gunjan Prithyani, the senior analyst of India Auto and Auto Components, to discuss the latest trends from the sector. Nimesh.
Thanks, Harma. So you rightly pointed out, I have with me Gunjan from BofA Securities. Gunjan, thank you very much for joining us from the conference and taking time out for us. First, let me start with the near-term numbers and the near-term outlook for the auto industry. The numbers have been quite muted, and also the guidance seems to be quite muted as well from most of the industry players. First, the short-term and the near-term view on auto industry.
Okay. Thank you, Nimish, for having me on your channel, and thank you for coming here. As I reflect at the data, and not just what came through yesterday, but for the last 3-6 months, I think the only space that sort of stands out is tractors. Combination of things, good monsoons, good farm cash flows, etc. But outside of that, I think you look at PVs, CVs or two-wheelers, the underlying trend has been very flattish or maybe marginal growth at best. So clearly, the trend line is softish. And I would go ahead and say that even for the next couple of months, we could continue to see a little bit muted trend because we are in a low season for autos, it being monsoons. And there is pretty much lack of new launches on the horizon. So, my sense is a bit muted for another few months and, some consolidation in the near term.
Sure. Also, at the entry level, both at the bike and at the car level, the numbers have been quite soft and muted. What's your take there? Is it going to take more time for revival in that space?
So I think the challenge there has clearly been more about affordability. The price points that have risen due to regulations over the last couple of years is a headwind. I would say that, it has been a couple of years of muted volumes in those sub-segments. And if we see a combination of rural coming back, rate cycle easing, and some of the government policy support through income tax relaxation, my sense is that we should see some revival, but it's going to be very gradual. I think the only point or data point that I'll sort of bring out here is that if you actually look at the non-SUV or hatches segment, it was deteriorating by almost 16-17% consecutively for last 2 years. But if you look at last 6 months, the data has been actually flatlining. So that tells you that things aren't deteriorating anymore. When they improve is, we'll have to watch out.
Sure. We spoke about the near-term headwinds, but what about the little long-term tailwinds for the sector? Second half, we will see the good monsoon playing out. The festive season is quite early this time. Rate cuts will get passed on, and also the interest, the benefit that the customers are going to get with the cut in taxes for a lot of people. So from that perspective, do you think second half is going to be quite strong for autos? And within that, what would be your top bets?
Sure. So I think I'll take this more from a sub-segment perspective. I mean, tractor is one space, I think, which is a bright spot and continues to remain top on our pecking order within these sub-segments. But I think the other space that we are constructive on is passenger vehicle. I do think that when we get to the second half of this fiscal, we will see launch activity picking up, and launch activity is an important driver for bringing the volumes back. So that's one. And secondly, if you look at last year, it was a slow year for passenger vehicle industry. So to some extent, the base is not as demanding as we get towards the second half of the year. So combination of things, some you pointed out, income tax relaxations, rate cycle easing, pickup in launch activity, and a less demanding base sort of gives me some comfort that we should see a rebound on the passenger vehicle. So it would be tractors followed by passenger vehicle in terms of sub-segments for our pecking order.
Gunjan, we reported about a large block in Ola wherein Hyundai sold out, and you yesterday actually downgraded the stock as well. I won't come to stock specific, but largely in the two-wheeler space, how are you looking at the EV penetration and who you think would be the biggest beneficiaries or the big winners in the two-wheeler EV space going forward?
Okay, so it's very interesting, Nimish, that you bring up EVs. If you look at EVs, it has largely been a two-wheeler phenomena for the last couple of years. But if you actually look at the trend for last 6-9 months, we've seen the change in narrative from it moving from two-wheelers to four-wheelers. So I would say if you look at two-wheelers, it's been sort of range-bound at about sub 6%. And we just keep seeing the tables turning between the top three. But the excitement has been more on the four-wheeler side. For last year, there was this common narrative that, EV is saturating in four-wheelers. But you look at this year, we've already reached from sub 2% range to 4%. So market has doubled since October. Of course, very low level, but that sort of tells you if you bring products which are more exciting, if you price them attractively, there is case to be made on the four-wheeler side as well. So still very early stages, but I think the narrative has shifted a lot more in terms of excitement towards four-wheelers on.
And do you think Tesla is going to further excite the market in terms of penetration, in terms of the reach and all, or it's going to be disruptive? What's your take on Tesla's entry into India?
Interesting question, and it's been a year, more than a year that we've been talking about Tesla now. I think, of course, the new EV policy or scheme that government has put out is an interesting concessionary duty. But if I just look at what Tesla's plans so far, known to public, known in public domain are, it's largely a retail-driven strategy. A lot of the hirings that they've spoken about are largely retail, customer service oriented. Hence, to some extent, it still feels like, the cars, when they come into India, are going to be more niche premium. And hence, the scale-up would be a lot more gradual. There isn't a manufacturing plan on the table as of now. But I'll also, maybe talk a little bit about a lot foreign brands that have come in India and have been marginalized. And we've seen it. The many foreign brands which have come and gotten marginalized or exited out of India, because it's not just about bringing a product. I mean, I think Indian customer is a difficult customer to please. You need features, you need right price, you need service network. So I think just bringing a product is not something that can assure you of a success. So let's see their plans.
So from a product point of view, Gunjan, you think M&M has done the right thing? They've placed the right products, right pricing, and they could be one of the big winners in the EV space going forward?
So Nimish, I'll refrain from any stock-specific comments, but I'll say that we're in a very early stages right now. So I think it's very early to say who will be the winner and the loser in this, because I think both the customer choices as well as the regulation is evolving. And I mean, the parallel that I can draw is two-wheelers, right? We've seen winners change names or top three change so quickly in last 1 year, right? So let's let the sort of space stabilize a bit. Too early to call the winners and losers.
Let me ask you one last thing before I let you go, Gunjan. There's going to be a GST meet in June, sometime in June. The dates are not yet announced, but always there is a hope of some relief for the two-wheelers in the GST rates. Your sense on whether that will come, and if it comes, how big could be an impact on the two-wheelers?
Okay, fingers crossed. But this is a recurring hope for last many years that I've been looking at the space, and since GST came, that, two-wheelers is a space that, that warrants lower rates. We don't know. There has been a long-standing ask from the industry.
If it comes, it will be a big positive for the two-wheelers?
I would say affordability has been a big issue for the industry. So, bringing a 10% reduction from a 28 to 18% is certainly a big respite. But let's see what happens on the GST.
Okay, Gunjan, thank you very much for joining us. Back to the studios, guys.
Thank you so much, Nimesh. An interesting conversation there. Of course, affordability is one point that Gunjan raised, and that is something that R.C. Bhargava of Maruti Suzuki has been highlighting for quite a while now. So auto stocks will continue to remain in focus for a variety of reasons. Interesting conversation there at the BofA Securities Conference. By the way, the Nifty is still down 90 points, so it continues to fluctuate from the highs to the lows. It's a volatile trading session so far. We take a short break. On the other side, Pawan Goyal from Naukri.com joins us to discuss the latest job and hiring trends. Stay tuned.
Welcome back to Trading Hour on CNBC-TV18. Shifting focus to the latest job and hiring trends that we're seeing coming in. And this is coming from the Naukri JobSpeak data that was released yesterday. Now, what we're seeing this time is 9 out of 16 sectors that showed positive year-on-year momentum. However, there was no growth in fresh hiring, and while IT softwares that continue to see a decline, AI and ML learning, sharp surge on that front as well. To discuss more of this, we have Pawan Goyal, who is the Chief Business Officer at Naukri.com, joining in with us. Pawan, good morning. Thank you so much for joining in with us. Let's just start by talking about IT trends. That remains a concern every time that we talk about. This time also a decline that we're seeing coming in. Overall, if you could talk to us about what are you seeing in terms of the main concerns coming in? Also, is it just senior level hiring trends that are not happening on IT, freshers, if that is what we're seeing? What is the trend on the IT front that now we're seeing?
See, what we are seeing in IT is premiumization of talent. If you look at the senior experience band, there is growth in IT hiring in senior experience band. But on the other hand, on freshers, there is very little hiring or very little hiring growth. Now, however, if you turn to non-IT, there are segments where there is fresher hiring as well. However, on the premiumization, experienced talent, secular, both IT, non-IT. In non-IT, we see fresher hiring, but not in IT. In IT, really, that as you called out, AI, ML, that is a secular trend. We've seen that 20 to 50% kind of increase in hiring for almost more than a year. So that trend is secular and here to stay.
Okay, AI and ML is here and secular and here to stay. Are there any other specific sectors also that are now looking out for more candidates coming in on this AI, ML related learning form or jobs over there? Because everyone is integrating AI with themselves. So how is that moving?
So in general, in non-IT sectors also, usually there's a demand for tech talent. And we saw that happen during the COVID wave. And I think that that continues to be there. Now, we've not yet seen a shift, particularly in any of the non-IT sectors. Now, in terms of the other sectors which you said, which might be doing well, this unicorns. Unicorns are seeing a very robust hiring across cities. So there's a 19% growth in unicorn hiring. So the startups are still creating good jobs in India.
Right. Startups specifically also, I'm seeing Pune in startups, that has done well this time, right? Are there any other cities, unicorn, startups? So in that front, are you seeing any other trend that is shaping up in other cities as well, whether Hyderabad, Kochi, any other tier 2, tier 1 cities?
So if you take a longer view, tier 2 cities have been growing at a faster clip than the tier 1. However, if you look at May in particular, the growth differential has normalized, and there's a couple of percentage points, which used to be much higher in the previous months.
Pawan, good morning. Thank you for joining in. There are sectors like retail, telecom, management, consulting that have not done fairly well as per your latest trends. But you can leave retail and telecom aside, but even in this consulting business, would you attribute this underperformance to AI? Because what you would generally ask a consultant, pay them a fee, you just ask AI and it will give you that in a matter of seconds. Would you attribute that to AI as a big factor?
So I think we'll have to wait and see for some more time to say that that's really because of AI. But you're right, the AI is impacting in terms of increasing productivity across different functions. Coding and customer service is often talked about, but it is pretty much every white collar segment. It is impacting, delivering increasing productivity. So has the muted job growth recently because of AI or other geopolitical factors or other things? I don't want to speculate on that. We had a significant operation that also happened in this earlier in May. But we'll have to wait and see whether it is because of AI or some of the other factors.
Since it has been such a buzzword, Pawan, what is the weightage of AI that you have on your JobSpeak index?
So we've not called that out specifically. I'm not in a position to call that out right now. But while the growth is substantial, the number of jobs are still. It won't. I don't think it will move the needle on the JobSpeak.
Okay, you don't see it moving the needle on the JobSpeak data. Just in terms of trends that are coming in from the consumption side, FMCG managed to see growth this time, right? Overall consumption trend, hiring over there, what is it?
So FMCG saw growth, but it's a modest 2% kind of a growth only. So I think one has to see that as on a sustained basis to call it saying it's really changing. I think from the sectors that have sustained for a long duration are real estate, oil and gas, hospitality and travel, insurance. These have sustained hiring growth for several months. So those are the sectors which I would say from a hiring standpoint have continued to do well. One of the things that we saw in this May, which is very surprising, is GCC growth moved from a plus 10% in April to a minus 5% in May. I hope it remains one-off and the GCC growth story continues back, but that's a pretty significant swing we saw in April to May.
Okay, Pawan, thank you so much for joining in with us, highlighting the recent trends in terms of hiring that we saw in the month of May. So thank you so much for that. But on that note, we're going to slip into a very short break. And on the other side, we'll discuss the road ahead for Vodafone Idea after the Supreme Court rejects Vodafone Idea's AGR relief plea.
Welcome back. Another company that has been the talk of the town over the last few days has been Vodafone Idea, and its hopes of getting relief in the AGR dues have hit a wall, with the government reiterating that no waiver request can be entertained in light of the Supreme Court's final judgment. Ashmit is joining in with more on this.
Well, clearly, the government, Telecom Minister Jyotiraditya Scindia, in the statements that he's given, he's clarified that, look, the Supreme Court has ruled on the matter. That is the end of it, that there's nothing on his table that will allow him to go ahead and to grant AGR relief. And mind you, this is consistent with what CNBC-TV18 has been reporting. CNBC-TV18 was the first to report where a submission had gone from Vodafone Idea to the Department of Telecom asking for some relief, asking for a waiver of the interest and penalty dues of the AGR. However, at the time itself, in response to the letter, DOT had clarified that, look, in light of the Supreme Court judgment, our hands are tied. We cannot consider this relief. Subsequently, we had Vodafone Idea moving the Supreme Court. And there again, for a second time in tow, the DOT again, by way of the Solicitor General, clarified once again that our view is clear, that the Supreme Court judgment makes the position clear. There is no room that is available for grant of relief. And on the basis of that, we had understood that the Apex Court went ahead. It had dismissed the application altogether for grant of waiver. It had clarified that, look, it is shocking that this petition is being filed despite the fact that the Supreme Court has already given the AGR judgment, that this petition is entirely misconceived. And on the back of that, even that petition being dismissed. So that dismissal of that petition by Vodafone Idea now being cited by the Telecom Minister Jyotiraditya Jyotiraditya Scindia, where he's clarifying that, look, the Supreme Court has had the final word. Our hands are tied. No room available, nothing on my table to grant any further AGR relief on the waiver front to Vodafone Idea.
Ashmit, thank you very much for that. So clear communication coming in from the Telecom Minister Jyotiraditya Scindia saying that the Indian government will not provide any sort of relief on the AGR front. That said, the company still continues to keep out hope because yesterday there was a conference call, and in the conference call, the company said that our view is the government can see no reason why the government should be constrained if it decides to offer relief. So the question is, what's the way forward now for Vodafone Idea? We have with us H.P. Ranina, Senior Advocate of the Supreme Court, Shiju P.V., Managing Partner of India Law LLP, and Anupam Sanghi, TMT lawyer. Gentlemen, thank you very much for joining in. Mr. Ranina, we've been discussing about what next for Vodafone Idea. Now it seems amply clear that the government is not in a position to help. Their hands are tied. What do you think will be the way forward now for Vodafone Idea and how this plays out?
Yeah, I mean, is that for me?
Yes, sir. Mr. Ranina, sir,
Okay.
this is for you. Your opening comments.
See, the government has its own constraints. I don't think you can pressurize the government to take any call. Supreme Court has said that's an executive decision. They will not interfere with it. The government is free either to give or not to give. Now it's entirely the government's decision. Government says, look, we have already given you the relief. Why don't you ask your own promoters, your own shareholders, the equity shareholders to put in more money? And I think it's a fair judgment because the reason being that you can't use taxpayers' money to go on, helping the private sector. To some extent, the government has got almost 49% of the equity in these telecom companies. They can't go beyond that, otherwise they become subsidiaries of the government of India. So you can't go on expecting the government to bail them out every time they have a problem. They have to find their own resources. And I think the minister is right. Nothing can be done. It's the government's decision. You can't tell them what to do. It's entirely their choice. If Vodafone wants to act, they have to get their own promoters involved, their own equity shareholders in UK or Netherlands, wherever they are, and ask them to invest more money. That's how it should be. You can't keep on expecting the government to put in more money, which is actually the taxpayers' money.
So what you're saying is that now the onus lies on the promoters, the Vodafone Idea Group, the Birla Group and Vodafone UK, or the existing shareholders, or perhaps even the banks, if they have to provide any sort of relief. But sir, we've heard, Mr. Kumar Mangalam Birla himself saying that in a way the company will have to shut shop, head to insolvency. So barring any support, money getting infused from the promoters or from the shareholders, and bank debt also has been lacking now for a very long time. Do you think insolvency is the next logical step? And who takes them? Because in this case, banks have limited exposure, I believe just 2,300 crore rupees. So they may not be forcing the company to head into insolvency. Will it be the government because they are the single largest shareholder, or do you think the Indian promoter will take the company into insolvency?
Well, that's what they say, that they'll take the company into insolvency. That may be just a way of, pressurizing the government. But in the past also, they've been doing that. So I think they have to put their own house in order. They have to somehow raise resources. And if they cannot expand, maybe they just do go ahead with what they have currently. But to say that if you don't give us money, we'll go into liquidation, we'll have insolvency, well, that's an unintended consequence. They will have to face it. But that's what the promoters themselves will lose a lot of money. So again, in the promoters group, Indian promoters group, they can put money. They have other resources. They have other companies which can generate the funds. So you have to be self-sufficient. You can't just go on, expecting others to bail you out.
The company needs to be self-sufficient. Shiju, weigh in with your thoughts. What next for Vodafone Idea? Is insolvency the next step to your mind? Or do you think relief is still possible because of that stray observation made by, the Supreme Court? It was not a part of the formal judgment, but they did make an observation that if the government wants to provide relief, they can. They will not, the Supreme Court will not hold them back.
The problem is not just a Vodafone issue here. See, Indian telecom sector is at an inflection point. See, at one point of time, we had around 10 companies in the telecom sector. Now we are coming down to 2 players. So the question for the government, for the executive is that whether a duopoly is good for Indian digital infrastructure space, because the whole digital infrastructure, the fundamental is telecom. So whether a duopoly is in the interest of the public. That's the first question. It is not limited to a Vodafone issue. It is an overall sectoral and structural issue faced by the telecom sector. Now, next course of action. Whether IBC insolvency is the appropriate relief, appropriate method. See, we have seen the case of Reliance, Arcom, and also earlier Aircel, Videocon, and etc. and all. Insolvency proceeding failed. The reason is that the spectrum is not an asset. See, when a company goes into insolvency, the main question is that what are the assets of the company? But unfortunately, spectrum is not an asset of the company, but it's only a licensee. And when there is no certainty that the spectrum license will continue post resolution, no serious bidder will come and bid. And it has been the stand of DOT that unless you pay the full AGR due, we will not continue with the license. So that is the fundamental reason insolvency proceeding fails in telecom sector. So overall sectoral reform is required. Also this conflict between IBC and also the AGR dues, claiming priority on AGR due, that also has to be resolved. And it has been litigated for quite some time. And a policy making through a litigation is not an appropriate method. So what is the need of the hour is an executive action. And that executive action is really missing.
That's an interesting point, that insolvency fails in the case of telecom companies like we've seen in the past, because spectrum and AGR, they're not hard assets which can be sold. Companies, the telcos, only have a right to use them. They're licensees. And therefore, it's not that you can sell them and generate money to repay. Anupam, so what happens, right? I mean, the company owes the government a lot of money, I think 1.8, 1.9 lakh crore in terms of AGR and spectrum dues. Does that have to be written off? Let's assume that we don't get an executive order. Right? There is no resolution package that comes out, at least for now. If the company heads into insolvency, does the AGR spectrum dues of the government have to be completely written off?
Well, the answer is not easy, for anybody to write off such a huge debt. But having said that, the mess has been created by DOT in the first place, by having such a broad inclusive definition of average gross revenue, including both licensed and unlicensed activities. And this more than 2 decades old case was resolved by the Supreme Court in 2019. So, and Supreme Court has further, there was a double whammy when the Supreme Court upheld the interpretation of the DOT and did not go by the interpretation and the judgment of the TDSAT, which is the specialized tribunal. And TDSAT had clearly said that TRAI has not even given a proper consultation while defining, gross revenue. So the whole question boiled down to a technical issue that, what can be included in the gross revenue, what cannot be, and, whether the accounting standards were properly used. And, Supreme Court not going by, the tribunal's view has had such a big, setback for the entire telecom sector. So I think, of course, the telecom sector should have also done better in terms of business negotiations, not just depending on the courts, but I think a resolution needs to be found by the government. Otherwise, this whole sector is doomed. Besides, whatever the PSUs will also, banks will also suffer. And nowhere in the world do you have these kind of spectrum charges. Nowhere in the world do you have this kind of compounding interest, which has come onto the telcos. And nowhere in the world has Vodafone failed. So we have to really question, why is it happening in our country? And what can the government do for this? because everybody can't just palm it off by just saying that now we are doing it for the consumers and let's let them go to insolvency. How will the consumer benefit if there are just two big players in the market? Will there be enough competition, which was created in the first place when we liberalized telecom in 1999, and we started with a revenue sharing policy? Are we not regressive in that sense now? So the question is, who is going to bail them out? I think it is going to be a holistic solution with the private telecom players finding some stakeholders, finding a business solution, and not just depending on courts. And at the same time, the government also taking few steps forward and making good whatever setback they have given to the telecom sector.
Mr. Ranina, one final word. But while you said that the companies need to be self-sufficient, the government still can bring in a fresh legislation and announce a telecom package, like they did 4 years back. That option is still on the table, right?
Yes, of course. Of course they can do it. But that's a matter of government policy. I have no problem with that. If you feel that it's an important infrastructural sector which needs to be protected, which needs to be nurtured, which needs to be sustained, then certainly they can come up with a package. Let them sit down, let the telecom operators sit down with the government and sort it out. As rightly said, let both come halfway and come to some solution. And they can raise funds from other sources as well. There are just small entrepreneurs that raise funds from private equity funds. They can also go to other sources for raising funds if the telecom sector has so good prospects in India. So I think everybody has to explore revenues, everybody has to put their head together and somehow work out for a solution for the best interest of the Indian consumer.
Gentlemen, thank you very, very much for joining in with your insights.
Okay. And with that, we are absolutely out of time on this edition of Trading Hour on CNBC TV18. Thank you so much from Hormaz, Rima, as well as myself and the team who put the show together. Up next, your halftime report.